Hello, thanks for tuning in. My name is Parker Trasborg. I'm a senior vice president here with CJM Wealth Advisors, and I've got Kevin Donovan, our portfolio research director, as always. We're here to talk about the October 2025 market update. And we've got our pink on because today is October 1st, the first day of Breast Cancer Awareness Month.
Yes.
So, Kevin, we want to spend a couple minutes again to discuss markets throughout the third quarter. The Fed finally unpaused and cut interest rates for the first time this year. How did the markets react?
Well, the markets react really well. The markets always like when the Fed cuts rates. It lowers the borrowing costs for companies, which could lead to potentially greater profits. Loosens up the economy a little bit. So the markets responded very positively, and we can see in the first chart here that particularly the Nasdaq did very well this quarter. So it was up double digits, 11% in 3 months is a pretty good month, pretty good quarter for any index. And the S&P 500 also had a good quarter, up almost 8%. That was followed by the Dow in international markets, and then bonds were up 2%, which for bonds isn't so bad. Equates to about 8% for a year if you analyze it, excuse me. So a good quarter overall. If we look back on the year-to-date numbers in that chart, that looks really good. We have the international index is up over 22%, very good year for international. International stocks really outperformed earlier in the year, though, when U.S. stocks were kind of suffering from the hits from the tariff announcements and the poor economic numbers in the first quarter. International stocks were outperforming by a lot back then. That's kind of carried through for the rest of the year so far. The Nasdaq is next, it's up 17%, and the S&P up almost 14%, which is pretty good. Bonds year to date so far are up 6.1%. But I want to point out something on this chart. You see that big dip right around the April timeframe, and then the big V-shaped recovery that we had coming out of that. That was around the time when tariffs were announced by the administration, and markets sold off really strongly on that news. And the Nasdaq was down almost 20%. So it was in a bit. It actually was a little bit over 20%. So it was technically in a bear market. If you look at the next chart, what I call the don't panic chart, this shows the recovery since the low of at that time, which was April 8th. And you can see that the markets recovered off of that low extremely strongly. The Nasdaq is up 48% since April 8th. I mean, that is a remarkable recovery right there. And even the S&P is up 34% and international stocks 25%. So this really reinforces the advantages of staying invested. Even if the market sells off strongly, you have a diversified portfolio that's going to cushion that fall. And a big reason also to stay invested is you never know when the market's going to turn. In this case, if you sold out when the market was down dramatically on April 8th and didn't get back in until 2 days later, you would have missed one of the biggest market recovery days in history. As we said, the Nasdaq was up 48% since that low, but if you got in 2 days later, you would only have a return of 32% on the Nasdaq. So you have missed out on 14 percentage points of return just by panicking and getting out when everyone else was selling. Staying invested works, and I think this is a really strong example of that.
Yeah, I mean, that's a huge difference in performance there just from missing a couple of the best days. And it goes to those charts we sometimes pull up once in a while. If you miss the best 10 days out of the last year of how much of an impact on the return it could make to your overall portfolio. So staying invested continues to be the key. Now, the administration at Washington, D.C. had kind of upset markets earlier this year. Today, the government shut down. How do markets typically react during a government shutdown?
Yeah, it's hard in a video like this to talk about this because things may change tomorrow and the government could be open again. But typically for the markets, a government shutdown is not a time, it's not a bad time for market performance. You may see more volatility, so we may have more sharply up downs and more sharply down days. But overall, the markets usually take these in stride. And once the government reopens, it's back on full steam ahead. This is more a government DC issue than it is a corporate earnings issue.
And again, highlights the importance of continuing to stay invested. Well, that's again all the time we have today. Thank you so much for listening. I wanted to promote a webinar we are doing on Thursday, October 16th at 12 p.m. We are hosting Silver Bridges Consulting to discuss senior living options, and I hope you're able to join us on that. Again, thank you for joining us today. And as it's October and we won't be getting together until January, I wish you a very happy and cheerful holiday season. Thank you so much.